What if I told you that owning just one stock could put money in your bank account every single month for the rest of your life? Today, we're breaking down what happens when you own 1,000 shares of Realty Income, ticker symbol O, and the monthly payouts might shock you. We're talking about a company that has increased its dividend for 132 consecutive times since going public, and by the end of this video you'll know exactly how much passive income you'd be generating and whether this legendary dividend stock belongs in your portfolio. So buckle up because we're about to dive deep into the math that could change your financial future forever. Realty Income Corporation, trading under ticker symbol O on the New York Stock Exchange, isn't your typical stock. Founded in 1969, this company has earned the nickname the Monthly Dividend Company because they literally pay shareholders every single month instead of quarterly like most stocks. They're a real estate investment trust, or REIT, which means they own income-producing real estate and are required by law to distribute at least 90% of their taxable income to shareholders as dividends. Their portfolio consists of over 15,000 properties across the United States and Europe, including essential businesses like pharmacies, grocery stores, and dollar stores. These are recession-resistant tenants that people need regardless of economic conditions. What makes Realty Income truly special is their track record of consistency. They've been publicly traded since 1994 and have increased their dividend 132 times since then, making them one of the most reliable dividend stocks in the entire market. Now let's crunch the numbers that everyone wants to know. As of September 2025, Realty Income pays a monthly dividend of 26.95 cents per share. This means that with 1,000 shares, you would receive exactly $269.50 deposited directly into your account every month. That's $3,234 per year in passive income, just for holding the stock. To put this in perspective, with the current stock price hovering around $60 per share, your initial investment of $60,000 would generate an annual yield of approximately 5.4%. But here's where it gets interesting. This dividend has been growing consistently. The company just announced their 132nd dividend increase, bumping the monthly payment from 26.90 cents to 26.95 cents per share. While that might seem small, it represents the power of compound growth over time. 10 years ago, the monthly dividend was significantly lower, and shareholders who held through those increases have seen their passive income grow substantially without buying additional shares. So how do you actually build a position of 1,000 shares without breaking the bank? The key is dollar cost averaging combined with Realty Income's Dividend Reinvestment Plan, or DRIP. Instead of trying to buy all 1,000 shares at once, you can start with whatever amount you're comfortable investing and buy shares regularly over time. For example, investing $1,000 per month would get you approximately 16 to 17 shares at current prices, meaning you'd reach your 1,000 share goal in roughly 5 years. The beauty of this approach is that you buy more shares when the price is lower and fewer when it's higher, averaging out your cost basis over time. Additionally, by enrolling in the DRIP program, your monthly dividends automatically purchase additional fractional shares, accelerating your path to 1,000 shares. Many investors also look for opportunities to buy during market dips or when the stock price pulls back, as Realty Income tends to be sensitive to interest rate changes. When rates rise, REIT prices often decline, creating potential buying opportunities for patient investors. Before you rush to buy 1,000 shares, let's talk about the risks because honestly, no investment is perfect. Realty Income's biggest enemy is rising interest rates. When rates go up, investors can get higher yields from safer bonds and CDs, making REITs less attractive by comparison. We saw this play out in 2022 and early 2023 when aggressive Federal Reserve rate hikes pushed Realty Income's stock price down significantly, even though the company continued paying and increasing its dividend. Another consideration is taxation. REIT dividends are typically taxed as ordinary income rather than qualified dividends, meaning you'll pay your regular income tax rate instead of the lower capital gains rate. This makes Realty Income particularly attractive in tax-advantaged accounts like IRAs and 401ks. The company also carries debt to finance property acquisitions, and while this leverage can amplify returns during good times, it also increases risk during economic downturns. Finally, remember that past performance doesn't guarantee future results. While Realty Income has an incredible track record, economic conditions, real estate markets, and tenant creditworthiness can all impact future dividend payments and stock performance. Let's get practical about what $269.50 per month could actually do for your lifestyle. For many Americans, this could cover their entire grocery bill, significantly reducing their monthly expenses. It could pay for streaming services, gym memberships, and dining out without touching your regular paycheck. Some investors use their Realty Income dividends to fund vacation savings accounts, building up $3,200 annually for travel and experiences. Others reinvest every penny to compound their wealth over time. But here's where it gets really exciting. Imagine scaling this up. With 2,000 shares, you'd be receiving over $539 per month, which could cover many people's car payments or significantly reduce their housing costs. At 5,000 shares, you're looking at over $1,347 monthly, which starts approaching supplemental income territory. The psychological impact shouldn't be underestimated either. There's something powerful about knowing money will hit your account every month regardless of whether you work, whether the market goes up or down, or whether you're sleeping. It's the closest thing to a personal money printing machine that legal investing can provide. The beauty of Realty Income isn't just the monthly payments, it's the foundation it provides for building a diversified monthly income portfolio. Many investors use O as their core holding and then add other monthly paying stocks like EPR Properties, LTC Properties, or Stag Industrial to create multiple income streams throughout the month. This strategy helps smooth out any volatility from individual holdings while maximizing your monthly cash flow. Some advanced investors even use covered call strategies on their Realty Income shares to generate additional monthly premiums on top of their dividends. The key is starting with that solid foundation of reliable monthly income and building from there. Remember, wealth building isn't just about getting rich quick, it's about creating sustainable income streams that can support your lifestyle and financial goals for decades to come. Owning 1,000 shares of Realty Income would put nearly $270 in your pocket every single month, creating a reliable income stream that has grown consistently for over 30 years. While there are risks to consider, the combination of monthly payments, dividend growth, and recession-resistant properties makes this stock a cornerstone holding for many income-focused portfolios. If you found this breakdown valuable, smash that subscribe button and hit the notification bell, because next week we're diving deep into the top 3 monthly dividend stocks for 2025, including 2 hidden gems that most investors don't even know exist. Leave a comment below telling me what monthly income goal you're working toward, and I'll see you in the next video where we continue building your path to financial freedom, one dividend at a time.